Hello, everyone, and welcome to Fundera's live Q&A session on Paycheck Protection Program loans and PPP loan forgiveness. As a reminder, we do these every Tuesday and Thursday to keep you informed about any updates to the Paycheck Protection Program. It's also an opportunity for you to ask our internal loan forgiveness expert and Senior Director of Finance, Justin Ridgely, any questions you may have. I'm Shannon Smith, part of Fundera's webinar team, and will be hosting this webinar alongside Justin moving forward. Please remember to submit any questions you may have ahead of time using the Google form provided in the follow-up emails from our team. You can also submit questions during this webinar by using the Zoom Q&A box. If you have any questions we don't get to, please feel free to reach out to our team on Twitter or email support@fundera.com. We'll also try to include any questions we don't get to today in next week's session. The last thing I want to highlight is that our team will be hosting a new webinar on SBA 7A loans next week. You can find more information about that in our follow-up email today. With that said, I'm going to hand it over to Justin, who will provide the latest updates about the program before we get into questions.
Thanks, Shannon. Okay, everyone listening, you may or may not have been aware, but yesterday the Senate passed the House's resolution that they passed last Thursday, which is the House Resolution 7010, otherwise known as the PPP Flexibility Act. This bill went from the House to the Senate early this week, where it went under debate for a few days. There were a couple objections that I can kind of cover in a couple minutes. But it did pass yesterday, I believe unanimously, and will now go to the president for signature. So at this point, it's safe to assume, in our judgment, that you can start planning around these key changes. And while there weren't that many changes made, there still is room for Treasury and SBA to interpret some of these changes and tighten up the guidance around them. But before we get into those kind of edge cases again, I just want to cover what the main changes are in this bill. First, it expands the covered period from 8 weeks to 24 weeks. So what this means is that if you were in this position where it was going to be difficult for you or impossible to spend 75% of the loan balance on payroll costs during 8 weeks, and thus you were going to get less than 100% forgiveness, you now have far longer to do this. And this has tripled the length of the covered period for anyone who has a current PPP loan and anyone who receives a PPP loan before the program application period ends on June 30th. If you already have a PPP loan, you are allowed to use the 8-week timeline and submit for forgiveness just as you would have previously. But you do also have this option now to spend your money over a 24-week period, which will, for most people, put them right at the end of the year almost. So, this makes it a lot easier for those who are wondering, well, I don't have my full staff right now. My business is closed or demand's really down. I'm worried I can't spend all this money on payroll right now. Well, this is a great news in that situation. You can now spend it over a longer period of time, and it should allow a lot more businesses to get to 100% forgiveness with this new time period put in place. Another big change is the threshold of the 75% payroll expenses to get to full forgiveness. So the way this worked previously is if you had a $100,000 loan, if you wanted to be eligible to get it all forgiven, you had to spend at least 75% of that on payroll, and the remaining 25% or up to 25% could be spent on other non-payroll costs that are eligible for forgiveness, which are chiefly, rent, mortgage, interest, and utilities. But now this has been dropped to 60%, meaning that, over a 24-week period, you would only have to spend even, 60,000 out of that 100,000 on payroll, and you could spend up to 40,000 on those other costs. So this, can give you more flexibility if you're a business that, might be closed right now and you need to pay your rent, and you're worried that, before you weren't going to be able to get all the way to that 75% or just not spend enough on expenses like rent. Now you have more flexibility to tweak that balance towards what makes sense for your business. I have a note here that there is some confusion around the wording of this bill, and we expect it to get remedied by another bill or Treasury or SBA at some point. But right now, it's a little bit confusing whether as to if you don't get to 60%, it seems like you could read it as you don't get any forgiveness at all. My personal view is I don't think that that will ever be the case, and there's a lot more time to kind of work this out since most businesses can, will opt to do the 24-week forgiveness timeline. The other main provision is that the June 30th safe harbor date, at least so far as it relates to these, potential reductions in forgiveness, seems to have been pushed back to 12/31. I say seems to because it's very clear in the wording that this definitely applies to the full-time equivalency reduction, where you have a lot longer to get back to your previous levels of employment. But it's not crystal clear if the same thing applies to the salary and wage reduction, potential hit you could take. It seems very likely that it will apply to both, but again, we'll need the SBA to kind of take the bill and then make it into, crystal clear guidance, which is kind of what happened with the CARES Act, where there was a more vague bill written, and then, a lot of provisions were layered on top of that. As part of this, this 6/30 to December 31st change, there's also an additional provision that is an exemption for those businesses who are unable to restore the same level of business operations due to, COVID-19 related operating restrictions or a couple other, ways they word this impact. It's very unclear what that's going to mean from, how do you prove your business was impacted this way? How do you prove that your revenues are down X percent, to be eligible for this waiver? This is one I really do expect to get clarified in the coming weeks, and hope that it, that there's kind of robust guidance put out so people know what they're working with. But theoretically, it should, increase the number of exemptions for businesses that just can't hire back to their previous levels. Maybe because you're a restaurant that only can serve 50% capacity legally. Another provision that was changed is, the minimum maturity of the loan is lengthened from 2 to 5 years for all loans that are issued after the date of this bill being signed, which hasn't happened yet. So unfortunately, this doesn't affect most people that already have their loans, and only if anyone borrows a new PPP loan from, now until June 30th. And I guess now really means from when President Trump signs the bill. Also, any principal or interest payments, before were kind of deferred 6 months at least, and now they're deferred no earlier than when the lender receives the payment for that forgiveness from the government. Meaning, if you apply for forgiveness on, January 1st, 2021, you'll not have had to pay anything on the loan, even if you don't get it all forgiven at that point. And then if, say, you get 90% forgiven, you won't have to start paying any principal or interest back on that loan until not only does the lender approve, your forgiveness amount, the limit, the non-100% amount, but they have to have received the payment from the federal government for that money. So it pushes off any liability on a loan portion of, the PPP till, after the bank gets their money back, essentially, which means for now, you don't have to worry about paying interest or principal until you, know what's happening with your own forgiveness. So a lot there, some big changes, I think some really good changes. What we didn't see was, some bank groups had actually been suggesting that there be a certain blanket forgiveness provision for any loans under a certain dollar amount to make this whole process easier, as banks are really worried this is going to take a lot of time to process. There's a lot of documentation that goes into it with these new provisions around showing, business impact due to COVID. There's going to be even more documentation required. So we haven't seen that yet, but we're hoping to see, maybe even some further guidelines on top of this down the road. The reason why this was kind of approved as not a, a wholesale solution to potentially every problem was that, a lot of businesses are coming up on, or have come up on even their 8-week period, and they wanted to get, the 24 weeks passed and in writing, so at least businesses don't have to worry about running into the end of this timing before they're, before they got clarity on this. So more to come, but, the 60% and the 24 weeks are both good changes, and the 1231 change seems to be quite good as well. So with that, Shannon, I'm gonna pause there and let you go into Q&A. I think I'm gonna have to update our whole deck on this in the coming days. After President Trump signs the bill, and then probably again once the SBA updates their guidance. But for now, I'll answer any questions I can. Kind of based on this new guidance. With the disclaimer that these are fairly high level rules, and we'll need to kind of understand how they're going to be implemented down the road.
Great, thanks Justin for the update. Our first question is about documentation. What kind of documentation is required to show that you offered someone a job back and they refused? Does a text message printout suffice, or is an official offer letter needed?
So the SBA has not made that exactly clear yet. I would encourage anyone listening to try to get as much written documentation as you can. So a text message, may end up sufficing. It's technically written documentation, but I think you'd probably be a lot better served by having some sort of offer letter, or even an email chain that says I'm offering you this job at X rate or X salary, and I'd like you to start on this day, and then a response from that person saying I decline that job offer. I think that is a better standard than having a text from someone, which you'll then have to kind of prove that you didn't fake that with someone else. And I think it's just a lot better coming from a business email account. If you don't have that, then obviously do the best you can. But I would encourage people to try to go out of their way to get things documented in writing that kind of identifies both parties, if possible, in that exchange. So it's clear what's being offered and what's being turned down.
Great. Next up, we have a question from a participant whose loan was disbursed 4 weeks ago. They want to know, when do they have to have the employees back to the same FTE? How is this calculated and proven?
Yeah, so the FTE reduction or potential reduction, calculation, the way that it did work was essentially, you compare your average FTEs over the covered period, and then look back at one of two other periods, whether that was the first 2 months of 2020, or I think it was February 15th to June 15th, 2019, and then you kind of do that ratio to get a quotient, which you would then apply to the loan amount. Now with this 12/31 date, it seems to be pretty clear that you'll have a longer period of time to get up to that your prior level of full-time equivalence. The way it's actually worded in the bill, like I said before, I expect this to get kind of tightened up and clarified, but it seems to say that as long as you get back to where you were prior to February 15th by the end of the year, that you wouldn't be penalized for reducing full-time equivalents. But essentially, the calculation works where you're looking at your covered period, which is now longer, and comparing it to a prior period. But then, really what it is based on this safe harbor date is, as long as you get to where you were previously before the end of this period, then you won't get penalized.
Great. Next up, we have a question about the loan forgiveness process in general. When the time for applying for forgiveness comes, how will that be handled? Will the lending institution set up a process like they did for applying for the loan? And what processes will be put in place?
So I don't totally know the answer to this yet, but I've had conversations, with various lenders about what they're going to do, and we've seen some companies that are offering banks somewhat of a turnkey solution for this, and what I think you're going to end up seeing is something that's very similar to how the banks did it on the application process, where there's likely to be some sort of online portal, by which you go and kind of fill out a digital version of the forgiveness application. You then submit your supporting documents through that portal, and then will eventually receive a decision back in some period of time from the lender. Again, just to reemphasize, there's no application that will go straight to the SBA, and this is very much going to be determined by the lender that you used when you're looking to go get your forgiveness and apply. your first step would be to reach out to your bank or at least visit their website and see if they have any portal for this, or ask how you would go about applying for forgiveness. Like I said earlier, despite the fact that the 24 weeks has been lengthened, there still is the option to do it in 8 weeks. So they can't just punt this off till the end of the year, because there will be some borrowers who want to get this done, have spent the money, and want to move on. So I expect to hopefully see more banks come out publicly with what their process is. But again, I expect it to be very similar to the application process, potentially with more back and forth, as the documents for the application were complicated enough, and depending on your situation, the documents for forgiveness could be even more complicated.
Another question we have is, if you are an independent contractor and receive 1099 but do not have a business bank account and money will go into a personal account, how do you prove money was used for payroll?
So this one we get asked all the time, and it's a very fair question. My general answer is, if you just have received the PPP funds in your personal account, you obviously you're not going to do anything to pay yourself because it's all in the same account. So there's a few options. You could create a separate bank account, move the PPP money there, and then pay yourself out of that account. So I go create a second checking account. My 100,000 PPP gets deposited there, and then I pay myself 10 grand out of that, and then another 5 grand out of that the second month, or something like that. And then that's how that would work. The dollar amounts there 100,000 wasn't the best example, but you could use a separate bank account to keep track of it. You can also potentially, I don't know how this would work, maybe write yourself a check, to yourself and deposit it back into your account. I've never actually done this, but I had someone suggest it to me. I think also you could try to keep records, in some accounting software that you maybe normally keep for your business, despite the fact that you're an individual contractor or sole proprietor. I think just the goal is any way that you can have a written, or not written, but digital record from a third party or arm's length type system that shows it's more than just you attesting to you doing it. I think that's better. And there's a lot of probably individual situations, but you want some type of verifiable third party record is what you're going for. So whether that's through QuickBooks, you have your payroll register, or you have a separate bank account, or you write yourself a check, or something else that I haven't even thought of, I'd be interested to hear suggestions. And just go with what makes sense for you, but try to get it documented.
Awesome. Thanks for clearing that up. Another question we have is, can investors who owned apartment units apply for PPP or EIDL loans?
Yes, if, it depends what structure, or does it depend on what structure, but, if you own them as an individual and collect rent, you're a sole proprietor. If you have an LLC and own them through that, structure, that would also be allowed. Essentially your revenue, right, is from those leases. And so, what you do with that revenue and how you calculate your wages to get your average monthly payroll, could be a little different. If you're a sole proprietor, that'll appear on your 1040 Schedule C. If you're an LLC, you may be using K1s or Form 1120 or whatever it might be to kind of come to that amount. But there's no reason why, that business would be precluded from applying for a PPP loan.
Great. Next up, we have a person who received a PPP loan, and they want to know if, now that rules may change the length of the covered period, does this mean they need to reapply to another lender for the additional weeks of coverage, or do existing PPP loans automatically get the additional coverage period?
Good question. Glad someone asked this. The answer is you do not have to reapply. This is a change that's being made to all existing and future PPP loans, which will, the future being only from now till June 30th. No more PPP loans will be eligible to be issued after June 30th. But if you already have a loan, any of these changes, the longer period of time, and the others I discussed, automatically apply to your loan at your choice. Like I said, you could keep to the same rules as before, and that's no problem at all. You're totally allowed to do that, but you don't have to do anything to take advantage of this longer 24-week period.
Thanks, Justin. And I know you talked a little bit already about the process for applying for PPP loan forgiveness, But could you
Mhm.
please clear up whether lenders will be reaching out to businesses, or will businesses have to contact the lender to go through the forgiveness process?
I imagine it'll be a combination of both. I think some lenders will be more proactive about it, and you'll probably get an email in the same way that maybe you received your loan documents from them previously. That'll say, here is our forgiveness portal. Go here to start your application. Or, there are going to be some banks that especially smaller ones potentially, that made these loans and haven't fully been able to build out their forgiveness solution on meeting their online platform. And you may be sitting here wondering, okay, what's going on? How do I actually start this? Again, I think some banks will probably end up moving a little bit slower because of this 24 weeks, even though there are going to be people that want to get it done earlier. It's just that if I'm a bank and 5 out of my 100 customers want to get it done immediately, I can wait a little longer if the other 95 don't come till later.
Next up, we have a question from a person who wants to know if all the money is not spent in 8 weeks, can they keep going with the balance?
So I'm not sure exactly what that means. What I'll say to that answer is that now 8 weeks is 24 weeks. So if you were in a position before where you couldn't spend your whole PPP loan in 8 weeks on the forgivable categories, then yes, previously it then would have the rest would have turned into a loan. But now, I think it's pretty clear that most businesses are not going to fail the forgiveness test based on the amount of dollars spent. If you received a loan based on 2 or 2.5 times average monthly payroll, and you have 6 months to spend it, then you should have no problem spending it on payroll and other non-payroll forgivable expenses. I think if you wanted to spend it on other categories of items, then you could still, I guess, opt to keep some of it as a loan and apply for less forgiveness. But I think in general, a lot of companies will get given the timeline. I would, in dollars being a dollar here, a dollar for one expense and a dollar for payroll are fungible, meaning you're better off just getting 100% forgiveness and using all of these proceeds on forgivable expenses over this much longer period.
Great. Another question we have is about documentation. What specific type of documents are required for rent and utilities? Do bank statements or copies of actual bills work?
I think either of those will probably work. I'm going to pull up just one slide I have here, which is just kind of a copy from the current SBA application. Basically, these are what's listed. What I'm showing on the screen now. A lease agreement and receipts are fine for rent. Like a rent statement each month would be totally fine. And then if you have bank withdrawals to pay for that, that's fine too. But I think the best case for like a rent or a utility is just going to be your monthly bill. Mortgage interest might be a little more complicated, but you could probably get some documentation from your mortgage lender or anything else. Again, this is just what's listed currently in the application, but the standard here with any documentation, like with the application, is whatever you have that best shows from a third-party source the detail that the numbers you're actually putting into the application. That's what you want to go with.
Will the forgiven portion of the PPP loan be included as part of taxable income when filing taxes?
So the IRS specifically issued guidance on this like a month ago, and they did say that it would count as income, which essentially, makes it so that if you get 100,000 in forgiveness, you're going to lose about a quarter of that or something around that area on on taxes, which makes it obviously less attractive, better from a cash flow perspective, but still would suck to have to pay that at the end of the year. When the IRS issued this ruling, there was a lot of outcry from lawmakers and other industry groups saying like, whoa, the point of this is to help businesses, give them basically free money here. Why would we then tax them on this? So the IRS has yet to reverse their position, but it's not unreasonable to expect them to do so at some point. There is time on this one, obviously, since we're still less than halfway through 2020. As long as this marathon year may seem, we're still not to July yet. So there's a lot of time for the IRS to clarify their position on this. We hope that they will change this so that you don't get this loan forgiven and it count as other income and then you be taxed on it.
Awesome. This next question is about hiring employees. This person had to fire 2 employees and 1 employee left for another job. They had 10, but now are down to 7. Are they able to hire new employees? And what if they can't get back to the original 10?
Right. Okay. So the 2 cases that were just mentioned were someone quits, which is out of your control, and then if you had to fire people for cause, which is a specific exemption, or both are specific exemptions that are currently written in the PPP forgiveness rules, meaning, if you can't get back to that level because of these reasons, then that's okay. I think that the way the new rule is written, it just came out last night in this law, there may be a slightly different standard around you have to try to hire people back, and if you can't, or if you prove you can't for whatever reason, then that's okay. But the one kind of thing I'm interested to see how this all works out is like when it was a shorter time frame and someone quits on you, a few weeks before the end of your eight-week period, it's a lot harder to kind of hold someone accountable for rehiring another employee, which you are allowed to do to answer the original question. You can replace an employee and then you'll still be fine with it. Like that counts to get you back up to your numbers. But I think now, the SBA may take a harder line on rehiring. An example I'm thinking of is if you had an employee you fired for cause in June, and then you try to say that, you couldn't rehire that person in the next 6 months, essentially, like to, November or December, then I think they may take a harsher view on that, and, don't probably want businesses to just have people quit or be fired and then not rehire them, over this much longer period of time. Again, that's just my hunch. But right now, you can hire different employees to get back to your numbers, and those 2 cases are allowable as reasons why you couldn't make the employee count whole.
Okay, great. We're getting short on time, but we do have time for one more question. And this question is from a person whose loan amount calculations were based on the original parameters when they applied. They want to know, now that they have more time to pay, will they or could they get more money?
No, unfortunately not. I don't, or at least I've not heard of anyone being able to do this. I imagine if you just got approval from your bank and you haven't received the funds yet, you may be able to cancel that loan and reapply for a larger loan. But again, you're still limited by what the calculation goes into the loan itself, the 2.5 times average monthly payroll. The changes are supposed to be designed on this lengthening of the program to allow you to spend the money better, not to get more money. So I guess the answer to that question is probably not. You focus on getting the loan that makes sense for you based on your average monthly payroll calculation, and then these changes should help you spend that on forgivable expenses over this longer period of time.
Great, thank you, Justin. We are just about to run up on time, so we will end things now, but it has been super helpful, and we want to give a big thank you to everyone who joined us today. We hope to see you again next Tuesday to go over any additional updates for the program and answer more of your questions. In the meantime, you can find us on Twitter and support@fundera.com to get any of your questions answered. And please be sure to keep an eye out for the webinar recap email today, which will include a recording of the slides and any other additional resources from the presentation. As Justin mentioned, the PPP Flexibility Act would make forgiveness rules more flexible for small business owners. Once the bill gets officially signed, it would be a great time to apply for PPP if you haven't already. If you're interested, we'll include a link to apply directly in our follow-up email. Thanks again for joining us, and we hope you have a wonderful week.